In 2000, Red Lobster ranked 16th among the top 500 casual dining chains. However, by 2023, the company has been struggling, accumulating tens of millions of dollars in losses and waning investor confidence. All of this has led to the sale and potential bankruptcy of this once iconic brand. So, what led to the decline? But before we continue the video, please support the channel by hitting the subscribe button, like button, comment below, and also share the video. Thanks for watching. Red Lobster was established in 1968 by Bill Darden with a single seafood restaurant in Lakeland, Florida. Darden was a pioneer of casual dining, a concept designed to offer meals that were more affordable than upscale dining yet nicer than fast food. Perfect for a date. Red Lobster was at the forefront of this new dining category. Just 2 years after its founding, Darden sold his chain of restaurants to General Mills, a company primarily known for its cereals, with the aim of expanding Red Lobster's locations and diversifying its menu. So, what made Red Lobster so popular? The variety that was offered. Red Lobster had over 30 delicious seafood options on one menu. By 1984, the chain had grown to 365 locations, and by 1997, it had more than doubled that number. This expansion cemented Red Lobster's status as the largest casual dining seafood chain in the nation during the late 20th century. In 2004, Red Lobster launched its Endless Shrimp Deal, an instant hit among customers, available for a limited time each year. The promotion invited diners to enjoy all the shrimp you can eat, capturing massive interest. However, Red Lobster soon encountered a significant challenge: the rising cost of seafood. In 2013, a sharp increase in shrimp prices really impacted the company's profitability, which led to a notable decline in Red Lobster's revenues compared to Olive Garden, another restaurant chain under the same parent company, Darden. As a result of these financial struggles, Darden sold Red Lobster in 2014 to a private equity firm for $2.1 billion. The deal included the sale and leaseback of all the real estate properties Red Lobster had accumulated since the late 1960s, a common strategy in the restaurant industry to raise substantial capital up front, though it sometimes leads to downstream consequences. By 2020, Red Lobster's principal seafood supplier, Thai Union Group, along with other investors, took majority control. Thai Union sent executives to help rejuvenate Red Lobster, aiming to enhance its reputation and integrate it more profitably into their business portfolio, rather than letting it become a financial burden. In the subsequent years, Red Lobster, along with numerous other casual dining chains, faced significant economic challenges. The pandemic led to widespread labor shortages and rising inflation, which increased labor costs and ate into profits. Hiring restaurant staff became much more costly, significantly inflating their operating expenses, an industry expert noted. Additionally, rising interest rates escalated the cost of their leases. When you don't own your properties outright, your fate isn't entirely in your own hands. You're susceptible to fluctuations in lease terms and real estate costs, which can increase unexpectedly. To offset these financial setbacks, Red Lobster urgently needed a successful promotion. In June 2023, the company launched a bold initiative. Ultimate Endless Shrimp is what they called it. However, this time it was made a permanent year-round offer, available for just $20 at Red Lobster. Intended as a loss leader, the deal wasn't profitable by itself, but aimed to boost customer attendance during a period when many prefer dining at home. The strategy appeared promising as executives noted an optimistic uptick, with the Endless Shrimp promotion bringing in a 4% increase in foot traffic during the third quarter. The success of the promotion quickly exceeded expectations. Red Lobster customers were so excited, sometimes they would use social media to set personal goals of how much shrimp they planned to eat that night. Some would say, "Tonight, My goal is to eat 65 shrimp or 45 shrimp. The brand had effectively marketed the deal through both traditional and online channels, generating significant buzz, perhaps even too much. The Endless Shrimp Special proved to be far more popular than Red Lobster had anticipated, primarily because the $20 price point did not cover costs. We don't make much money on this promotion at $20. We don't, and that's a major reason for the losses we incurred in Q3 2023, explained the management. The company reported an $11 million operating loss for the third quarter, a substantial increase from the $2 million loss in the previous quarter. Sales in 2023 also fell by 8% compared to 2022. Currently, Red Lobster is ranked 41st among the largest U.S. restaurant chains. In January 2024, Thai Union Group, the current owners, announced its decision to sell Red Lobster. In March, Jonathan Tibbus was appointed CEO, known for his expertise in restructuring brands like Crystal and Kona Grill. His hiring suggests a higher likelihood of Red Lobster facing bankruptcy in the near future. Thai Union Group management went on to further explain it wasn't just because shrimp wasn't profitable enough, the seafood chain. However, it opened the door that caused a cascade of problems. For example, customers sat at tables for long stretches of time, eating course after course of shrimp, the former executive said. This slowed down service and created longer wait times. Exactly what the chain didn't need, as people packed in the door for a chance to grab infinite fistfuls of shrimp. We were expecting an increase of 20% in customer traffic, but the actual number was up to 40%, which meant more people staying longer and longer while eating more and more shrimp that was being sold at a loss. Basically, a recipe for disaster, Thai Union CEO Tirafong Chansiri said. With Thai Union Group's divestment from Red Lobster, it's going to take a $530 million loss on its investment. Regardless, despite those challenges, Red Lobster has continued to offer its Endless Shrimp deal, now priced at $25. So what do you think about the possible bankruptcy of Red Lobster? Do you think the bankruptcy is long overdue? Also, I'm curious about your personal experience with Red Lobster. Have any of you had the Endless Shrimp before? If yes, how many shrimp did you eat? And how long did you stay at the restaurant before leaving? Please share your thoughts and experiences in the comments, and again, please support the channel by hitting the subscribe button, like button, comment below, and also share the video. Thanks for watching.